Hey, what is up, everyone? Welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. We're going to be taking a look more at stocks today because there may be some events coming up that will create additional fear and possible sell offs in the markets. And of course, we can't do this video without starting off by looking at the fear and greed index. We are down into greed. We've recently been up in extreme greed, but now are coming down in the pie investing fear and greed website, which I do like. We are still in extreme greed at 77%. Crypto, we were neutral, and then recently we've been slowly climbing up because crypto, we're just going to hop over here quick. We did have a sell the news event with the ETF, got down under the 0.5 fib, went back up to it, been kind of going up and down. One thing that is curious to me, if we put on log, is we've been coming back up to this trend line that has been a thing since the bottom. And again, trend lines are only as good for as long as they're good for. And we keep smacking into it. Even when we go under, came back up, rode up, came up, sold the news and the ETF, came down through that trend line, came back up to it. So as funny as it is and as surprising as it is, the trend line's still in play. One of my indicators did show a sell signal on the weekly, where usually they play out to the tune of around 15 to 20% down, which would lead us to the next lower fib, and that would also match the percent move downwards. So 36, 37K still seems to be in play. That same indicator recently did just show a possible reversal, and it did just flash a buy signal. But again, sometimes these will bounce up and down. Usually the first indicator after about 6-ish weeks ends up being the one that's correct. So even though we do have a buy signal, I would wait this one out, me personally, because I am willing to be patient. I've got more crypto back here. Let's go over to the S&P 500. Actually, before we go to the S&P 500, there is a FOMC meeting for the U.S. interest rates, and they are holding. The Fed probably won't cut until at least March. People are theorizing March to June, somewhere in there. When they do cut, that means the Fed knows there are cracks in the economy and they need to cut before it's too late. So some people are celebrating, saying soft landing. It's still too early to tell. When we get rate cuts, that is typically when you can start the timer to see when a recession is going to be coming up. Right here we have the U.S. 10-year, 2-year, still inverted with the yield curve. When this uninverts, a recession is typically in the not too distant future. Now, there is a little bit of discrepancy, and that is when we do invert, on average, historically, recession is 6 to 12 months from inversion. We are way past that. In the Great Financial Crisis, it took longer than that. I want to say it was about 22 months after inversion. We were about 17 months, 18, coming up on 18 from inversion. And even with the year 2000, once we inverted, the recession wasn't happening until around 2002. So that one took a while as well. I do think it's probably better to take the data from the last 25 years as opposed to data from the 70s, 80s, 90s. Yes, you can find some things applicable to it. However, it does look like we are in new territory, and that the average length of time from an inversion with the yield curve to a recession is taking longer. At least over the last couple of recessions, that has been the case. Yes, we had the COVID flash recession. A lot of people still argue about whether or not that was a recession. The stocks did go down more than 20%. So I would say that pretty much was one. The VIX, the volatility of the markets, excuse me, let's get rid of the signal here. It's still low, and we haven't been in this territory really since the pre-COVID sell-off. Some people were waiting for possible recession back then. We got COVID that happened and things dipped remarkably fast. That was this right here. Let's actually put it on the weekly to reflect that better. We had the sharp dip down. But then rates, they were lowered to dang near nothing, and money was being printed to the tune of 6 to 7 trillion. So that's what ran us up over here. We had a pretty decent pullback into late 2022 from the S&P 500, almost 30%, over 20%. So that did a decent amount of damage right there. What I wanted to look at with you guys, though, something I've noticed, and this is at least on on the yearly, or sorry, on the daily, is that this market has been in a bullish trend for a while. I was looking back at the daily RSI, and we have not been under 50 on the RSI, that's the relative strength index, since the beginning of November. And I was looking at how long that was, and I'm just lining up the lines back here, and that's been about 60 days. It says 60 bars there. Or no, wait, sorry. 90 days. 60 bars, 90 days, excuse me. So it's been a while. And I went back about 5, 6 years. You're going to see this with me to see when's the last time we have been this overbought for this long. And what did that look like? So this move, since we have crossed over the 50, you can see right here, and we're going to go from the bottom of that candle to the very top. So we've gone up about 18%. All right. Yes, you could go from this candle here, but I would say technically we were under 50. So we're going to go over there, say about 17, 18%. All right. Going back, and I've just been looking at the RSI. Again, you don't buy or sell exclusively based off the RSI. That's just one tool in your toolbox. Going back, and it's looking for when have we spent this much time over the RSI? Believe it or not, this was a shorter amount of time. So, as you can see there, close, but just a little bit shorter. You can see what the price did there, a little correction, another little correction, but really not comparable. I promise, guys, all these, I've checked, all these have been shorter. Even this one, yes, this one touched, went slightly under. So if we did consider this one, which does have a long length of time, you can see not too long after, we had this big drawdown. But I want to play this data for real, and that was a 35% drop in COVID. If we did go under or touch, I'm not counting it. Okay, so went back further. This one we went under. And it wasn't until I got here that I found a length of time where we spent longer than today in the overbought zone. And as you can see, just a little bit longer, 91 days. We are fast approaching that. I think this might end up being very comparable, but look what happened. We spent that much time and we sold off big. So let's compare the up move first from when we were overbought. We moved up, and I know it's not perfect, about 8%. Okay, 8%, solid, strong move up over a long period of time. The first sell-off down 8%. So imagine 3 months up, and then just within, half a month, we go down and erase all that. Then down 11%, and then down 20%. So is a similar move coming where we've moved up around 18%? Are we going to go down now around 18 to 36%? That would be crazy, but you never know. I just wanted to see what happened. Here's another time, and you can see it looks like we were just about it. So I was like, you know what? Like, I'll honor it. Right when we were at the 50, so right at the bottom of the screen candle. Went up about, this is a very similar move. 17, 18%. Look at that. Very similar move. This one took even longer. That's 154 days, even longer. But then after spending 154 days, 5 months going up, we didn't spend that long going down. to almost the same amount. It was about 2/3, so 12%. Again, we've gone up 18%, so is a 12%. That would be about 2/3. Is a 12% correction coming? I would say that's more plausible. Here, let's line it up. So I want to get that candle as close as I can. Went up about 13%. Then you can see the correction was minor. And this length of time did take even longer. It's longer than 126 days. It was about 136 days. Okay, so 4.5 months. And so I think moves up like this are healthier. And that's probably why it didn't have as much of a correction. It took longer, crawled up. It wasn't as volatile. And look at this, guys. This was November of 2016. So that's about 9 years worth of data right there. 8-9 years. This one was in 17. This one, again, is a move that's most comparable to the one we have now. And what's interesting is look at this. Look where the peak is. You can see at the bottom. The peak is end of January. Here, we started this move, this longer move, not like in November like we have done now. This was at the end of August. So you can say September to end of January. So this move took longer and had a pretty quick and sharp sell-off. If we had anything like this, that would be probably a great opportunity to dollar cost average in to some of your favorite stocks. This move, when did this one take place? This went until October. So July to October, and then, yeah, it erased all its gains and then some again in 2018. So, yeah, you could have bought this dip back here, bought it again when we got to the levels, rode it up to new all-time highs, and then all of a sudden it erased, went back down to the levels. So I'm sure when people are buying in here, they were excited, but then here we made this lower low, and that's bearish, and then boom, just had this big sell-off. And again, for this move at least, I mean, gosh, 20%, that's a lot. And that wasn't even the COVID crash. The COVID crash came not too long after, made a lower low. That one happened pretty quick. And then we rode up for a while before getting the 2022 bottoming and correction. So I have been wondering, okay, we've been spending this much time overbought. We've been spending this much time in greed. Let's take a look at the index here. So we've been in greed for, well, since mid-November, greed to extreme greed. Let's go back and see where was fear and greed during some of these times where we were overbought. So this was July 18. And then this one is the one I'm really curious about. September of 17. So September of 17, July of 18. Let's zoom out. And we're going to zoom in. So I said July of 18, right? Excuse me. July of 18. So yeah, look at this. We were up in extreme greed. Man, we went down quick into extreme fear. And then September of 17, that was right here. And look at this. Even though we were up into extreme greed, peaked pretty high, but when we went down, we only got down to neutral level for fear and greed. So maybe something like that is coming. Okay, maybe something like that is coming. We have, oh, I'm trying to reset it here. My goodness. You ever have that happen where messing around? Okay. So this is the most recent time. We've slowly been going up. If we only came back down and created a higher low in the fear and greed index, then maybe we are just going to get around 50, get up one more time, and then have a big sell-off. So that's just something I'm looking at with fear and greed. Again, guys, it's important to have a plan. Make your own plan as far as what to do. Before I forget, earnings. Tomorrow is very important with earnings. As you can see here, we have Apple Amazon and Meta. A couple days ago, we had Microsoft doing well, and Google people were selling a little bit after. So let's take a quick look at those 5 of the Magnificent 7 stocks. Microsoft. And what has Microsoft been doing? So it had a little bit of a sell-off recently. Let's zoom in a little bit to the 1 month. So yeah, you can see even though Microsoft is the #1 company in the world right now, it was over 3 trillion and it's come down to 2.95. I know that doesn't seem like a lot, but that's probably like what, $50 billion. So Microsoft has had a little bit of a correction. I'm sure it's some profit taking, 4%. If people have ridden this wave up for a while from the last year or few years, I mean, look at that. How much have we moved up since COVID? 200% for Microsoft. So we're in all-time high territory across the board with stocks and the S&P, NASDAQ, Dow, a lot of these top stocks. Of course, there's going to be some profit taking and sometimes just coming down is normal. Let's take a look at Google, see how they did after their earnings report. Maybe this is going to indicate something that's going to happen. This is the last 5 days after the earnings report. Boom. What kind of a move was that? That was around a 7% move, and it looks like we are going lower. Let's start zooming out a little bit. Okay, we've matched up with some structure back here. Let's move out a little bit further. Yeah, if we get below this structure, then it's possible you could see Google. I would say the 137 range. Let's draw a fib if we go from the last year and just draw a fib from the low that we've been to the high. Let's get rid of that. Okay, you can see here we're coming down to that first fib level. I am curious. Sometimes as we are moving forward into a year, we move past these things, and I'll move the fib up to the next structure. And this does look like it's making more sense that we came down, smacked that line, and then as long as we stay above the 618, I'd say we're still bullish. You can see here it went up, and that was probably the 0.5 at the time. Yeah, that was the 0.5 that it came down to, and then went up. And so maybe we could see Google come down to this 127, 128 range and expect a bounce. So something to keep an eye out for. Earnings tomorrow. What do we got? We got Apple. Apple has been surpassed by Microsoft as the top company in the world. It's about 100 billion less in market cap. Something I talked about not too long ago. As you can see over here, we went lower in price, higher in the RSI. That's called the bullish divergence, and boom, we went up. How high did we go? We went up 20%. That's huge. And then here we have bearish divergence, higher in price, lower in the RSI. Are we going to get another correction like that coming up? Let's take a look at the last year with the fibs. I'm trying to match up with the low here and the high, which was very recently. Okay. So hit that high, went down nearly to the 382, came up, back down. We're probably going to test that 382 again. If I had to guess, 0.5, I'd be looking for some strong entries in the Apple around the 172 range. So if you like Apple long term, there might be some good buy signals to get in there. I am curious if we put on one of my indicators, and I like to go look at the weekly. Most recently, we had a sell signal, and I feel we need to honor the first signal that plays out after a long move. So here we moved up for a while. Sell signal was first. Yeah, we had a buy signal about 5 weeks after. Came up. We had this big long leg doji and a sell signal. Came down a bit more. Here we started with another sell signal. We have another doji. So yeah, I'd be looking for that 0.5 level. Next, Amazon. Let's take a look at Amazon. And we can take a look at what the most recent signal was, at least on the weekly. We've most recently had a buy signal, but Again, I look for what the first indicator shows after a long move. Was this a quick reversal? Maybe. It's always possible. Indicators aren't always 100%. It's just one tool in your toolbox. Look at this nice chart. It's just been straight up. This is our yearly chart. Let's draw a fib. We'll go from that low down there to the high. And what do we see? What do we see? We touch this high. I would say definitely look for some support down here at the 144 range at the 236. Seems pretty strong. It looks like there is a lot of support at the next two fibs as well. So overall, looks pretty good. The one thing to note, though, is, and I was waiting to see what the RSI would do, we got up a little bit above where I drew the line at the time. I was curious to see if it would go up higher or not. We have lower action in the RSI, higher price. That is bearish divergence. So I would say that definitely look for Amazon to come to the 144, possibly 134 or 125 range. If Amazon gets to the 125 range, probably not the worst time to put in some money for the long term. Money you don't care about looking at for a long time. Of course, obviously, if it came down anywhere under 100, to me, that would be an amazing deal. Last one, Meta. Meta. Also known as the Facebook. All right, Meta. What do we got going on here? So we can see the RSI overall this last year still overbought, and the price is moving up. So that's just straight up bullish. Okay, I don't see any bearish divergence going on. And something else to notice, guys, look at the last year, how infrequent we've been under the 50 or the oversold region of the RSI. It's been very rare. Those times overall, not the worst to get in. Let's zoom out to the weekly, see if there's anything we notice. We had this big dip, of course, into 2022. I did get some Meta down here just because we were triple tapped on the RSI. I like the price a lot. And with Meta, something to know. And guys, you don't want to only look at technical analysis of a stock. You want to look at its balance sheet, what's going on with the company. The earnings were down a little bit, or the overall amount of money was down a little bit because Meta was investing so much in the research and development, and the money they were losing at the time wasn't going to continue. They were investing more into their company down here, and so, which coincided with the down market. Great business plan by Mr. Zuckerberg. So, eventually when things got more bullish in the market, they've reaped the benefits of it quite a bit. I am curious to see if the metaverse truly becomes a thing as they envision. We'll see. On the weekly, after we spent this much time down here, look, we weren't down there since the COVID times. And then before that, that was 2018 where we had a decent correction too. So let's draw a fib. Gosh, this is just so interesting how it's this giant V here. Not sure how much a fib is going to show us just because we've been crawling straight up. Yeah, maybe you can expect some plays around the 0.5, getting under 300 to this 287 range. Again, that's not showing us a heck of a lot. Let's throw up some indicators, see if there's anything we can notice. Okay, on the daily, we did get a sell. Overall, these sells have been met with buy demand. Let's go to the weekly. We started with the sell. Okay, this is interesting. This is just showing you how bullish it was. Look at this. We had this weekly buy signal after a strong sell move. And then look how long that went on for. This is from late November to next July. So you had 7-8 months. And then we got a sell signal and chopped around a little bit. What is interesting, though, is, we kept making higher lows in the price. And so we were able to reverse that signal. This is where I say, when we do follow up the sell signal with the buy signal, wait a few weeks, see what will happen. If it starts just chopping up and down for a while, like a few months, because usually these sell signals will play out by the end of 6 to 8 weeks. But if it's just chopping around, that's accumulation. So boom, we're just going up again. Nothing selling, going down there. Right now, Meta doesn't look like there's any great opportunities to get in for any shorts. Not that I preach that on this channel. 200-week moving average, let's zoom out a bit. We were under recently. Look, anytime we've touched the 200-week has tended to be a good time to buy or gone under. So that was one reason to buy Meta. Let's go look at the other stocks real quick. Amazon. Sorry, I just got rid of that indicator. Let's throw that back on, the 200-week heat map. Yeah, this is great times to buy Amazon. Going back, the 200 weeks pretty strong. Look at how it just loves the 200 week. So anytime some of these Mag 7 stocks are over the 200 week, tend to be pretty good. And then Apple, I'm wondering how close the 200 week is. So they're still pretty elevated. Can you imagine if Apple broke down under the 0.5? How bearish that would be? My cat says hi. She loves watching the mouse move on the screen, tries to catch it. Can you imagine if Apple turned bearish under the 0.618 and came down somewhere around these 120 levels? I mean, what a great opportunity that would be long term to buy. So it is interesting to see what is going on with Apple and how Microsoft has passed it. It's had more chop. It hasn't been the mega super strong stock as historically speaking. Microsoft has taken its place in that way. So just something to keep an eye on. Anyways, I'm going to end the video right there for today. Thank you guys for watching. Remember that I'm not a financial advisor. This isn't financial advice. It's just what I'm trying to do here is just build a community where we can share ideas and look for ways to simplify investing. Okay, you should always consult with a financial advisor, invest with one of them, whether it be IRA, CDs, money markets, whatever. But if you have extra money on the side and you're looking for simple ways to look how to invest, I think my channel is good for you. If you are a casual, low to medium risk investor, we're just looking for good long-term entry plays where you can put in some money when fear is really high, when things are oversold, we have strong stocks and just great opportunities. So I'm keeping an eye on things. One stock I did want to share with you that is looking somewhat bearish. Oh, it already moved up. Son of a gun. No, never mind. It's at 93. At least it's saying that on the right. Is it at 93? Okay, here it's showing 95. Here it's showing 93. Oh, market close. Okay. I was going to tell you guys that Starbucks overall was looking like a possible good play. Let's go look at the weekly. Bonus stock. Weekly. We sold off for a while. Look at this candle here. Does that not look bullish? So as far as a dividend stock, Starbucks has had a lot of fun in the markets because they're pro-Israel. Not a political post or video here whatsoever. I will say this though, when companies have a lot of FUD and a lot of things going against it, that might be decent times to buy. Now, if we look over the last year, where are we at in price? We're more on the lower end. We've been as high as 115, as low as 90, and right here, we're closer to the lower end. So long term, probably not the worst time to go in. Now, you could have gone in here when we were very oversold at 92, and this is up at 95 or 93 where it closed. Who knows how violence is going to move up. So, if you miss it by a few bucks, fine. But if Starbucks is a stock you really like, and again, remember my 2 rules about stocks to buy into. Is it a product you like? Is it a product you use? Is it something you see being around in 10, 20 years? So right now, macro-wise, I zoom out, I look at Starbucks, I look at this, let's draw a fib. This is just from the last 5 years. Where are we at? We're just near the 0.5. From the high, we got underneath it, came up, man, we are just coiling. We got close to that 0.5, which I'd say is very strong area of support. Look at all this structure. I wouldn't mind myself throwing a few hundred at Starbucks around these prices and just forgetting about it for 5 years or however much money you got and just letting the dividends do their work. So just something I wanted to share with you guys. If I ever find any good deals in some of the bigger stocks, I'm going to share that with you and hey, let you make your own decision. So hope you enjoyed the video. Hope everyone's doing well and get through the work week just fine. And yeah, have a good day, everyone. Take care.